Hi, everyone. Delfino Aguilar here, your host of Del Talk. And I'm really excited to bring on our next guest. We were just talking about location. I'm here with our guest, Rob Chrisman. Rob, thank you so much for joining our Del Talk series here.
Glad to be here.
Yeah, I'm excited. I'm actually, usually I do these out of my office. I'm actually in our corporate office today. So thank you. Thank you for your time. I know how busy you are. So, Rob, I enjoy waking up every morning to your emails, right? Like I enjoy it. There's always so much. I love the jokes, right? I love the information that's on there. But you made a name for yourself with giving so much knowledge and like a trusted source of information for everyone. And so for those of those are the people watching now that aren't familiar with your business and what you do. If you can tell us a little bit about yourself and the knowledge you put out every morning on a daily basis, that would be great. You can give us kind of an overview on that quickly here.
Sure, happy to explain things a little bit.
Yeah.
The sending out the daily commentary started many years ago when I was on a trading desk, hedging pipelines, and so, which is actually how I got to know Glenn a little bit. But it was always, we would verbally have meetings with our clients every day to talk about the position, talk about the market, what the market was doing. And then when email was invented, it became easier to send it out via email.
Right.
And then as the years went on, I continued to do that. And then, as things progressed and people would move around and so forth and so on. And in 2008, my mom passed away, and I wanted to spend more time with my family, and I wanted to help my dad out and deal with the estate and so forth. So I basically retired, but I continued to send out this little commentary to probably a couple hundred people at that time, and it grew organically. And the basic premise of the commentary is not to tell you what to think or when to lock or force my opinion down your throat. The purpose of the commentary is to comment about current events that are impacting interest rates, but also comment on what investors are doing and what is driving loan level price adjustments, or what Fannie Mae and Freddie Mac are doing that have a ripple effect down through investors to lenders to borrowers. And so I never presume to think that my opinion or my forecast is any more valuable than anyone else's. I like to think that we're all smart and we can all formulate our own opinions about what's going on out there. But so the commentary never really is too opinionated. Every once in a while, I'll let opinions sneak in there a little bit, but I try to give people the facts and let them form their own opinions and their own course of actions, and try to keep people informed so that they can help their borrowers. So that's the basic premise of the commentary. People oftentimes will ask about, why I put a joke in there, and the trade desk humor that I was brought up on in this industry was always pretty risque.
Yeah.
And when something bad would happen, usually there'd be jokes about it pretty quickly. Michael Jackson dies. Oh, well, suddenly, there's half a dozen or a dozen Michael Jackson jokes that pop up, none of which you could really print. And you learn kind of who likes that kind of sense of humor and who doesn't like that sense of humor. But there are some jokes that I put out that I think are generally okay. And if they're not, I'll put a little warning note on there. But I think sometimes people will make a point of writing to me or coming up to me at a conference back when we had conferences and say, I only look at your commentary for the joke. And I'll say, well, that's okay. You can do that. But someday you may be looking for a new LOS or a new wholesale investor or a job. And you may use my commentary for something else. Or you might wonder why your company just jacked up their loan level price adjustments for second homes by 2 or 3 points. In case it should be in my commentary. So that's why I send it out, basically to keep people informed and help educate them.
Yeah. Well, Rob, I got to tell you, I enjoy it. My team enjoys it. I like the jokes personally. Like, I think they're hilarious. But more importantly, I think you bring a lot of knowledge to us on a daily basis. We send out something internally here called the Sunrise Report to kind of give us our production and what's happening in the market. So the information you give us is valuable every day. So thank you for that. Transitioning a little bit. Talk to us a little bit about the market today. You just hit on the LLPAs, right? The loan lever adjustments. Maybe we can talk a little bit about that. But brokers and loan officers are watching this in the wholesale channel. And what should they be watching for, and what should they be really paying attention in today's market based on all the knowledge that you have and all the commentary you see?
So brokers are in an interesting position because oftentimes they are charged with not only dealing with the Jones loan and the Nguyen loan and the Hernandez loan,
Right.
what's going on with the appraisal or what's going on with this or that or the other thing, or the title report or the credit report came back, blah, blah, blah.
Right.
But they also have to keep their eyes on the horizon and what's going on in the industry, whether it's some big wholesalers who are in a fist fight over who the brokers do business with, or whether it's price war or what the economy is doing, because they are asked by their clients what the economy is doing, and gee, should I lock in now or should I lock in
Right.
a month and a half from now when my loan is supposed to fund? And of course, the answer to that is I'm going to give you the best price no matter when you lock in.
Right.
And from a capital markets perspective, capital markets team only wants you to lock in right before you're about to fund to minimize the hedge risk. But brokers, I think, are, from what I can tell from emails, they are most concerned right now about getting the job done for their clients. The big wholesale companies might be doing one thing or the other, saying one thing or another about, other wholesale companies. And that's all mildly interesting. But the brokers that I correspond with and the successful originators in general are focused on helping their borrowers. They're focused on going out and getting new business. And I know that sounds unusual, like all the phones do is ring, but at some point the phones won't ring. And so good brokers are out kind of laying the groundwork for upcoming new business. But they are they're very attentive to getting the loans funded for their existing pipeline, and making sure that the market doesn't get carried away on the upside, that things that might happen to different wholesale companies, good or bad, doesn't impact their clients. They're trying to get loans funded while locks are in place or while rates are still low, and they are still relatively low. Yeah, they've crept up a little bit. It's not the end of the world, but their eyes are really on helping their borrowers and keeping their customers satisfied, because customer satisfaction is very, very important, especially in the eyes. For example, the CFPB, the Consumer Finance Protection Bureau, pays attention to consumer complaints. And so keeping those to a minimum is important, and making sure as a broker, for example, if servicing is sold, oftentimes that client will come back to the broker and say, what's going on here? What does this mean? How does it impact me? How does it impact you? What's going on here? So brokers are really focused on customer service and funding their pipeline and going out and getting new business. So that's what I'm hearing. Let me ask you what you're hearing. What do you think is paramount in the broker's eyes right now?
I think you just hit it right on the head. I think brokers are ingrained in their communities. They're in their little league. They're heavily involved in whatever community they have. Some of them are working out of state, but they're building their book of business there. I think for them, the Fannie Mae announcement and how lenders acted on that was a surprise for them, and for a lot of people as well too. I think that brokers in general are trying to meet expectations from a lot of different angles. You got appraisals like you mentioned as well too. Those turn times are a little bit longer. Closing demand is still there. Agents want to close on time and quickly, and no matter what the appraisal, no matter if it's taking 20 days sometimes in some markets to get appraisals right now. And I think that's a challenge. But overall, what has always attracted me, Rob, to wholesale business, and we were talking about Wells Fargo earlier. I've only been in wholesale my career. I think, the wholesale broker is is the best option for borrowers to give them choice. And I think that's what's really important in this market. A broker can choose any lender that they want to work with, and they can give a borrower a lot of options. And I think that this year and moving forward, that's going to be really important as rates start to increase. And I want to ask you what your thoughts are on rates, because I think that's important. But I think that brokers are really concerned, number one, about their clients, their community, right? And most of them are starting to dabble a lot more in social media. Some of them, you mentioned, they just, I don't have time for social media because I'm referral based. And they might be now, but as you said, when rates go up, what's your game plan? What are some focuses you have on that? What are your thoughts are in general for rates, Rob? I mean, that's a loaded question, right? Like, Rob, what do you think is going to be October 2021, right? But you have like you mentioned, the hedge costs, right? We had Aaron Freeman, who was our SVP of Capital Markets in here earlier today too, and we were talking a lot about that. I mean, where do you see the direction overall? I mean, is inflation that big of a thing that's going to really affect that this year? There's a lot of talk about that. What are your overall thoughts on that?
Well, I always like to say interest rates are like the weather. We all talk about it, but there's nothing we can do about it. The interest rates themselves, and when you talk about mortgage rates or treasury rates, we saw a big disconnect between mortgage and treasury rates, or I should say treasury rates and rate sheet rates in 2020 with the pandemic. And in March and April, the Fed came in and didn't want a repeat of 2008, 2009. So they wanted to lend stability to the market in a hurry. And unfortunately, MBS prices shot to the moon. A lot of lenders suffered margin calls and so on. The stability has certainly returned to the market. So now the question is, what do you think about rates? Where are they going to go? Well, everybody knew that they couldn't stay as low as they were forever.
Right.
And so when you have a situation like that, when rates are very, very low, the pressure is for the rates to go up. And I think that's a safe bet from what I hear from different economists and different sources and different analysts and so forth and investment bankers, that the pressure for interest rates is toward the upside. It's not further downside. Mm-hmm. And the reason for that is twofold. The first is that the stimulus packages that have been voted in and signed by whether it's President Trump or President Biden, they do have a stimulative effect. That's why they're called stimulus packages. So they do have a stimulative effect on the economy. When you stimulate the economy and things start to, quote, heat up, the demand for borrowing, the demand for capital tends to increase. We finished off 2020, if you think about it, in a situation where companies weren't expanding. If you had a necktie company, there was no need to set up a new plant somewhere because nobody was buying neckties. I don't know how many people were buying wristwatches, new cars. People were working from home. They don't need a new car necessarily. So things slowed down. That's why the economy slowed down. That's why rates dropped. You have millions and millions of people that were out of a job and are still out of a job. So the stimulus packages that have been voted in are meant to obviously stimulate the economy, and with that comes a cost. Somebody has to pay for the stimulus packages. Trillions of dollars that have to be paid for by taxpayers, by revenue of whatever kind, by higher G fees or loan level price adjustments from Fannie Mae or Freddie Mac, or whatever money flows into the U.S. government. Somebody has to pay for those. We just can't keep printing money forever. So that's the first reason. It's like, oh my gosh, the stimulus packages are going to, they have to be paid for. And so generally that's thought of as a, through taxes. They're starting to talk about raising taxes as we knew that they would, regardless of who won the presidency.
Right.
But the second thing, and the more important thing, and I think what brokers need to understand is the economy is expected to do better. And that's why rates have crept up. It's because those necktie manufacturers might need to open a new plant. It's because those wristwatch manufacturers want to expand. It's because Apple Computer might want to borrow some money. And so as the economy heats up and jobs, more people return to work, they will start charging things on their credit card, and capital will start to be needed more so again. And so that's kind of what's going on out there now. It's the expectation of a economic rebound, given what's going on with the pandemic and the vaccine and so forth, and the case count. The economy is supposed to start doing better in 2021, and that's the primary reason why a lot of economists think rates are going to slide higher.
Slide higher, right? I mean, there's a lot of pent-up demand. I mean, I started traveling. I started last week. I traveled to Atlanta. And I got to tell you, Rob, I didn't know there was a pandemic. The airport was packed. Every restaurant in the airport was packed. I mean, it was kind of eerie to see, but also very exciting to kind of see the economy. I think there's a lot of pent-up demand. People are going to start to travel again soon for business, like you said, neckties and things like that. I think that's a piece that sometimes brokers and in general people forget. There's a lot of other factors that are going to affect mortgage rates and 10-year in the treasury and things like that. Rob, you talked a little bit about, the Fannie Mae earlier. You're talking about Fannie Mae doing an adjustment earlier, and you're talking about Freddie and Fannie. Like, what are your initial thoughts on, that 7% now? Anything over that, they're going to hit them on a percentage of that business or not buy it. So what are your thoughts of that, on that non-owner hit and the second home hit that came out by Fannie? Any thoughts around that?
Yeah, the FHFA came out a couple, some months ago.
Yeah.
Here we are in the latter half of March, and we had warning of this from the FHFA, which oversees Fannie Mae and Freddie Mac, that this was the direction they were intending to go.
Right.
So it wasn't a huge surprise. The with obviously with what Fannie Mae and Freddie Mac do impacts large investors, small investors, impacts lenders across the board, and impacts borrowers. The argument is to be made that Fannie Mae and Freddie Mac, if you look at their charter and what they were originally intended to do, wasn't necessarily to subsidize or make life easier for people who own second homes or who owned investment properties. It was to help home ownership, and second homes and non-owner occupied loans, or properties, investment properties, don't really fall into that. So the easiest way, obviously, to scale back their footprint is to change the pricing on those products that don't necessarily lend themselves to Fannie Mae and Freddie Mac's original charter. And that's exactly what we're seeing. I think the industry hopes that the adverse market fee goes away at some point. And it's like, the forbearance numbers continue to improve. We're not seeing a huge wave of foreclosures.
Right.
Benefits have been extended. So we aren't seeing that. And hopefully they're extended to the point where people start coming back to work. But really what Fannie Mae and Freddie Mac probably would be better off doing is reversing that adverse market fee. But it's very difficult to do once somebody gets used to making money from a certain source or whatever that might be. They are not happy about taking it away or removing it, because it's a source of income, and borrowers, millions of borrowers, are paying for it now, and with little adverse effect. But as things start to slow down a little bit, I think the industry is really hoping that Fannie Mae and Freddie Mac scale that back. With regard to the second home and the investment property from earlier in March, I think that's just part of their, Director Calabria's mission to help recapitalize Fannie Mae and Freddie Mac. This is another source of revenue, to raise those fees.
Right.
It's interesting because it has a ripple effect within the industry, because when Fannie Mae does something, then it impacts Freddie Mac, impacts FHA, impacts the non-QM lenders, and nobody wants to be the last investor buying non-owner loans or second
Right.
homes.
Right.
And you get that's 90% of your pipeline. And so
Right.
it'll be interesting to see if what FHA and VA do, what the USDA might do, what the non-QM lenders do for those programs. So
Right.
it was also interesting to watch the swiftness by which the lenders changed their pricing based on what was going on at the agency level. So it was very, very quick. And I think some of that is preemptive, because I'd read a statistic that over 50%, at the time that Fannie Mae made its initial announcement, that over 50% of the sellers to Fannie Mae had already gone above 7% with regard to second homes, with regard to non-owner occupied loans. And so 50% of those people were already over that 7%. So it's a little bit of a catch up. So we'll see where things go from here. But that's what I've heard.
Yeah. Yeah. Great. I mean, we'll see where it goes. I mean, like you said, it shouldn't be a surprise for everyone on that. They made an announcement that, like you said, Claudio said, the direction where they were going on that long term. I got a couple final questions for you. We touched on this a little bit. A lot of wholesalers. Even though we're a new company, a lot of our group has been together for a long time. Some of us have been working together for over 10 years. Where do you see the wholesale lender landscape look like in 2021? You mentioned earlier, that the competition is getting fierce out there, and we're taking kind of lending aside. Like, where do you see, that going in 2021, and moving forward? Because let's be honest, we're already at the third quarter, into the third quarter. We're going into the first quarter, right? And it's been kind of a crazy first quarter in 2021 already. So what are your thoughts around that? Do you have any about that?
I think the broker channel, well, let's take a step back. Let's go back 8 or 10 years or so.
Yeah.
And I would, as the CFPB started to gain in prominence and the enforcement actions started to happen and so forth, I would receive these emails from brokers saying, gee, it's just like we have a big target on our back. The CFPB is gunning for us. They want us to go out of business. They don't like the broker channel and so forth and so on. And I would usually reply, well, A, I think they might know what loan brokers are, but I'm not sure. And B, I really think the Consumer Finance Protection Bureau has bigger fish to fry than putting out, Del and Rob, putting Del and Rob's mortgage out of business.
Right. Right.
So obviously the broker channel has risen back up. It's a decent percentage of the business right now. And you mentioned it earlier in our conversation that brokers have they're attached to the community more than other potential lending avenues. If you're a realtor or a financial planner and you have a commission that is dependent upon making sure your clients buying a home and you need this deal to fund and you want to get the best deal, you don't tell your client, just go on the internet, go to a search engine and type in mortgage and you'll end up okay. You are going to refer that person to somebody typically in your community that you worked with before. Now, granted, that might be somebody at Bank of America or Wells Fargo, or it might be, a member of the team at Del and Rob's Mortgage. You don't know. So the broker channel, though, you're right. I mean, the loan brokers is coaching the softball team or sitting in the stands watching the soccer game or standing next to you in line at the Dunkin' Donuts or Starbucks. It's not necessarily somebody who's in a call center, 2,000 miles away. So I really do think that the brokers serve a purpose Excuse the noise here in the background.
No problem.
I really do think that they serve a purpose because they are smart and they are connected to their community, and they tend to get a lot of business through referral sources. Brokers don't have typically huge advertising campaigns. A lot of it is strictly word of mouth and referrals. And that's because the broker's sole focus is on helping homeowners. It's not necessarily, dealing with car loans or credit cards or whatever it might be. And so
Right.
you have a situation where really the broker is dealing with borrowers at the most basic level. And
Right.
when you have something like that, I think the clients appreciate it, the homeowners appreciate it, and so forth. And you can't just dismiss it. I think it's very, very important.
Right. Yeah. No, definitely. I appreciate that feedback. 'Cause I think, like I said, I'm a big, my career has been with wholesale brokers. I mean, Glenn was a broker himself. Our focus is definitely in the wholesale channel. A lot of great information, Rob. I'm going to end it with one question for you that we're asking some of our guests here. So, a lot of the successful people like yourself and everybody that's been on our Del Talk series here has a morning routine. You obviously are sending out emails. I thought I wake up early, Rob, but you're sending out, my emails come around 5:30. Yours are right there with me. So, do you have a morning routine, Rob, that you want to share with everybody watching? Do you do something specific when you drink your coffee to get you ready for your day, or do you have a routine that you want to share?
I'm Del. I'm just a simple person. I literally, I try to do as much of the commentary as I can beforehand,
Yeah.
the day before.
Yeah.
And then I do wake up at 4 a.m., Pacific time, 7 a.m. East Coast time, if that's easier for brokers to more palatable.
Yeah.
Really, I just stumble down the hall and turn on my computer and away I go. I've never been a big coffee drinker.
Nice.
And usually at that time of the morning, I'm dealing with pets. Something they want in, they want out, they want attention, whatever it is, they want food.
Right.
And that gives me about an hour and a half to really check the overnight news,
Right.
to see what news comes out, because the economic news, the important economic news tends to come out at 5:30 or 8:30 East Coast time.
Yeah.
Incorporate that into my commentary and then send it out. I mean, it's really, it's surprising when you're dealing with sending out a daily commentary like I am.
Yeah.
And I truly do enjoy it, but I'm dealing with people, sometimes they're in Europe, or
Right.
they used to be like on vacation or something. They would write to me, but mostly I start getting emails from the East Coast very, very early.
Right.
And then my day goes through originators in Hawaii sending me emails. So it's a wide geographic and time zone range that I'm dealing with. So it makes for a long day, but I enjoy it, and I enjoy the people in the business. And I think I mean, what a great business to be in. What better business? I mean, you talk about nursing or being a doctor and so forth, but we are literally helping people move into homes around the nation or save money every month. I mean, what better thing is it? So I enjoy it. And my routine is, getting back to your question, my routine is pretty mundane.
Yeah. Well, you know what? That's good though. Keep it as simple is great too, Rob. So thank you for sharing that. And listen, you've given us a lot of time. Thank you, Rob. If you're ever in San Diego again, if you said you were, let's have lunch. There's thousands of great Mexican restaurants that I can take you to for some Mexican food if you like Mexican food. There's one in Washington Street called Lucha Libre. That's really, really good. So I got to take you there. Give my friends a plug there on their restaurant. But if you next time, I definitely want to take you out to lunch if you're here. So I hope everybody. Yeah, I thank you, Rob. Look, listen, I hope everybody had a great time watching our newest edition of Del Talk with Rob Chrisman. You can follow Rob on robchrisman.com. You can also, he's also on LinkedIn at Rob Chrisman as well. And listen, Rob, thank you so much for your time. We really appreciate it. If you want to learn more about Kind Lending, please visit us at kindlending.com, our YouTube channel at kindlending, or Instagram kindlending as well. So Rob, thank you, my friend. It was great
You're
to
very
have
welcome.
you.
I'll talk to you later.